Hey guys, welcome. I've got a penny stock pick for you guys today that I want to tell you about. This one is called Charles and Colvard. They're a small company that is in the business of creating synthetic gemstones, and the business is undergoing a bit of change right now. I think that they've got a unique opportunity ahead of them, and in particular on this one, I think there's a bit of an imbalance in terms of the risk and the reward. I think potentially there's a huge amount of upside for these guys, and I think the downside risk is uniquely limited, and you put those two things together, and I think there's a really good investment opportunity here. So I want to tell you about some of the catalysts that I think are coming up for this stock. I want to explain this imbalance in terms of the risk reward for you, and I want to explain why I think this one is potentially a really, really good buy. Okay, so if we take a look at the company's story and where they're at, you need to understand a few things. So number one is there is such a thing as lab-grown diamonds. They've been around a long time. You know, we've had the technology to actually create diamonds. You know, you take carbon, you compress it in a lab, and you can produce a diamond that is chemically identical to one that you would actually pull out of the ground. There's really no difference, and these are typically referred to as lab-grown diamonds. There's another type of synthetic gemstone out there. It's called moissanite, and moissanite can actually be pulled out of the ground as well. It's a natural gemstone. When you do that, though, they're very, very tiny. The stones are low quality. They have a yellowish tint to them, and they never really caught on all that well, this idea of natural moissanite stones. And that's where this company come in, Charles and Colvard. They actually have a process to synthetically create moissanite stones that are much, much higher quality than the ones that you would pull out of the ground, and they are actually bigger. You know, they can manufacture stones of a significant size, something that was really, really difficult to do in the past. We've been able to produce moissanite stones for a long, long time, but to actually produce ones that are this crisp, this clear, and of this particular size is actually unique to this particular company because they have a patented process to actually create these synthetic stones. It's kind of interesting how they came by that process too. Charles and Colvard is actually a spin-off of a larger company that was in the business of LED lighting in the late 90s, and you know, almost by accident they discovered a process to create silicon carbide as part of their lighting business, and they realized pretty quickly that you could use the same process to cut these synthetic gemstones. So they spun off this business, Charles and Colvard, to actually produce these synthetic stones, these moissanite stones, and for many years they were in the business of producing them to wholesalers, you know, so they would sell on a business-to-business model. And more recently, they're actually now looking at transforming that business model into a direct-to-consumer model because they believe the nature of the gemstone market is about to change. So what's the nature of that change? Well, you know, it comes down to sustainability and this whole ESG focus, not only on the companies that we invest in, but the companies whose products that we buy. Natural diamonds can be pulled out of the ground, but there's an enormous environmental cost in terms of the mining operations, and there's a really heavy social cost sometimes in terms of the working conditions and the conflict that surrounds some of these diamond mines, and some of the ethical considerations of the way that these companies operate in some of the developing countries where a lot of these diamonds are present in the ground. There's a long, bloody history there, again, both in terms of the environment and in terms of societal impact. I think that, and this company thinks, that consumers are now becoming more and more aware of this, and they want to actually, you know, vote with their dollars basically and buy stones that are free of this social and environmental impact. And so that's really the idea behind this market opportunity, that is that as this preference shifts, you know, it will overcome this reluctance to buy fake diamonds and possibly create a very significant market shift and open up a big opportunity for a company like this that is uniquely positioned with deep patented technology to produce high quality moissanite stones for a market that's about to shift and open up for this particular opportunity. And so that's the investment thesis for this company, right? The idea is that the market shift is about to occur. Consumers are going to say, you know, if you put the alternative in front of me, I can either buy a natural diamond that comes with that high cost, or I can buy a synthetic stone that looks as good or even better in some cases than a natural diamond, then I'm going to actually go and buy that. And that's one of the unique things about these moissanite stones that the company produces. They actually sparkle a little bit more noticeably so, than a natural diamond does. And some people actually prefer that look. It's a little bit more showy, it's a little bit more flashy, and you can actually get that enhanced sparkle in a stone that is a little bit smaller than what you would do in a traditional diamond, and that has cost implications, savings both for the producers and the consumers, which is pretty attractive as well. Now, if you look at the total addressable market, it's somewhere in the neighborhood of $10 to $15 billion for engagement rings alone, and that doesn't even really tap into the ancillary market for other jewelry items, you know, necklaces and bracelets and earrings and pendants and all this kind of thing that typically have smaller diamonds set within them, and other types of stones as well. And so, you know, if even a tiny portion of that total addressable market shifts more towards sustainable moissanite stones, then this could be an enormous opportunity for these guys, right? You know, you take a small percentage, 1-2% of that $10 to $15 billion market suddenly shifts its demand over towards these kinds of stones, then you could take a small key player like Charles & Colvard and look at their market opportunity absolutely open up, and these guys could be looking at massive growth go forward if the trend shifts, if consumer behavior shifts, and if these guys are able to market properly into that opportunity. Okay, so in terms of catalysts, you know, that's the obvious one, right? It's this idea of a market shift. You know, if that happens, analysts have commented on this company and they've predicted growth of 20% year over year or more. That could be really, really significant for these guys. You know, obviously you put that out over the next 5 years and you're turning a $90 million company into a $500 million company. The share price is obviously going to benefit from that market opportunity opening up and the growth that these guys might be able to realize in terms of their sales and revenue. The second catalyst here is kind of obvious, and it's an acquisition. You know, these guys are, like I said, a $90 million company. They could easily be snapped up by a larger player in the gemstone market if, in fact, the consumer behavior does shift in their favor. I think they're an obvious acquisition target, again, because they have patented this particular process, and they are probably leading the pack right now in terms of their ability to produce high-quality synthetic stones at low cost using the process that they've got locked up. I think a lot of companies like De Beers and the other leaders could absolutely look at these guys as an acquisition target. The other catalyst I think here that's going on is there was an enormous deferral in weddings throughout the pandemic. You know, obviously you can't book venues and have these big crowds and parties and things like that. I think as the reopening happens, there's a big backlog in terms of wedding demand, and obviously, you know, these folks have to go out and buy engagement rings. So there could be an enormous tailwind, you know, across the board that a lot of analysts are predicting for that gemstone market in terms of engagement rings. And even if nothing changes, I think Charles & Colvard stands to benefit from that, just increased sales due to the reopening play. Okay, now if we take a look at the value of this company, you know, the share price has had a recent run up. You can see here what's happened, and it's kind of interesting. I don't think that a lot of this recent run up has necessarily much to do with this change in consumer behavior and the opening up of the total addressable market. I think it just has more to do with the fact that these guys had a really good quarter. I think they're starting to see that initial reopening tailwind hitting the stock price, and it was reflected in the last quarter results. These guys are doing well. They hit profitability. You know, I think the market got excited about that. The stock price got bid up, but I don't think that's the real play here. I think the real play is yet to come in terms of this potential change in market dynamics. I think the stock price could have a lot of room to run based on that, and I like the fact that the current valuation seems to be well supported by the fundamentals, right? This is now a profitable business. Sales are improving quarter over quarter. These guys have growth ahead of them. Even if, you know, this larger market dynamics change doesn't happen, these guys are making money, and I think they're going to continue to make money. I think the current price they're trading at is quite reasonable. So what's the bad news? You know, I think the downside, like I said in the intro, is limited for these guys, you know, because the downside is that this shift in consumer behavior doesn't materialize, right? So, you know, it's really, really hard to predict what consumers are going to do. There's a lot of sentiment and consumer perceptions around lab grown or fake stones or whatever you want to call them. So maybe that's going to soften the demand here. Maybe the demand for sustainable gemstones is not going to be what we hope it's going to be. Really, really hard to predict that behavioral consumer element here. If that doesn't materialize, then we're not going to see that significant shift in the total addressable market. Now, that said, if that happens, what's the worst case scenario? Well, the worst case scenario scenario is that these guys are still a profitable company. They're still going to experience organic growth at the rate that they're experiencing it right now. And also, you have to consider the fact that these guys are transforming their business into a direct-to-consumer model. They're becoming more vertically integrated. So regardless of whether this larger opportunity materializes, the business is still doing the right things to recognize, a substantial amount of growth go forward. That organic growth is going to continue to happen. I don't see any reason why it wouldn't. And so that's where I think the downside is limited for these guys. They're going to continue to be a good business, even if things don't go amazingly well. But things could go, in fact, amazingly well for these guys and have that huge market open up, right? So I love this imbalance in the risk-reward situation. Okay, so what's the summary here? Look, again, it's that imbalance in risk-reward. I think that it's a bit of a gamble. We're gambling that shift in consumer behavior is in fact going to happen. I think even if it doesn't, these guys are still a profitable business. I think it might still make sense to buy them. So, this risk-reward imbalance at the current price, I think totally makes sense given the valuation. And so I think this one is a really good buy. If you agree, let me know down in the comments. Hit the video a like and subscribe, ring the bell. I'll see you guys in the next one.